I think there's some common misconceptions that crop up when you meet entrepreneurs. Oh God. Yeah, maybe you didn't want to see this one. Okay.
Bit too much detail.
Thanks, Darren. There's some common misconceptions, I think, when you meet management teams, which I've sort of outlined here. I'm not going to go through every single one. They're a bit self-explanatory, but a classic one is we need some cash. Therefore, we should go and see a VC and try and get some cash. But you might not be necessarily, ready to take investment from a professional investor. You might be actually better served looking at getting business angel financing. Try and understand where you are in your company development before rushing into seeing institutional investors. I mean, we're very happy to see companies over a number of years come and see us and then come and see us a year later. But always try and work out in your own mind whether you're actually ready to start talking to professional investors or whether or not you should be doing an additional seed round with business angels. Technology will sell itself. A great technology will sell itself. I mean, I think we've all seen entrepreneurs, fall in love with their own technology, which I think is great, and that passion is definitely something we wouldn't want those guys to lose. But obviously, when you see a lot of new technologies, your perspective is that only 1 in 100, or something of that order, actually gets through. So it's all really about execution. However good your technology is, your commercial execution of getting that technology to market is absolutely key. And the competition point again is whenever we talk to management teams, they quite often list off their list of their competitors, but they say they're not really competitors because they're not anywhere like as good as us. And when we actually look at the market that they're operating in, you're always thinking, well, if these competitors are actually not as good as you, why have they got more sales than you? Why do they have more customers than you? So always think about why your competitors, even if you think their technology or product offering is inferior to yours, why are they being successful commercially? And sales forecasts, again, if you're an early stage company with only limited sort of sales traction, it is very difficult. It is all a bit finger in the air stuff. But try and substantiate as much as you can where you think you're going to sell this, and who you're going to sell it to, and who your channel partners are going to be. And I think the last point here, which is obviously one of the most thorny issues you get when you're talking to early stage companies as a VC, is as the company evolves and grows, is the existing management team going to be able to step up and deliver that growth? Always take a hard look at yourself and try and work out, when are you going to be able to accept perhaps a lesser role in the company if it's appropriate, but just start thinking about these things before you sort of pitch up and present to a venture capitalist. This other slide just follows on from that, which is again something I don't think people do very often before they come and see us, which is, what do you actually want from the deal? What are your sensitivities? Okay, you want some money out of it, but what are you really sensitive to? Are you worried about loss of control? Are you worried about not participating fully on a cash exit? Are you most worried about building a sizable business, or is this the first time you've done it? Would you actually just be quite happy to kind of get some experience of running and growing a business dealing with VCs? And unless you sort of analyse that before you come and see us, it's very difficult. When you get to negotiating a term sheet, for example, it's very difficult to get beyond some barriers, which is we might give you a term sheet, and we need to understand before we do that, how we should structure it. And I think that I think VCs probably have a reputation which could be justified in having very complicated investment structures, but often the reason they come about is we're trying to bridge valuation expectations, and having to bring things in like performance ratchets, founder exit options, convertible loans, because we don't fully understand exactly what the founder, manager, owner or management team wants. So try and understand and analyse exactly what it is that you're prepared to give up before you come and see a VC, because I think it makes the whole process a lot easier. Okay, I've just got some summary points here about the sustainable sector. Some of this has been quite generic, a little about early stage companies looking for VC funding, but we are seeing that the sustainable sector is bucking the trend in VC in terms of the numbers and amounts of investment that's that's being made. So, if you do have a sustainable technology company, you're more likely to be able to raise money, and there are a larger number of VC investors who are looking at the sector. Some are just dipping their toe in the water. Others, like ourselves, are fully focused on it. I think the higher commodity prices that we're seeing are driving a sort of convergence between the low carbon and the CSR side into real cost efficiencies. I think we're seeing with some of the carbon audit, supply chain audits that are going on, how people are understanding that if they have a low carbon footprint, that actually just means cost savings and efficiencies within their business as a whole. So there's a convergence there which is happening, which I think again is going to drive a lot of products and service businesses in this sector. There are still, with all this being said, there are still a limited number of VCs who really do understand the market. We've been in it for 18 months. I think we understand it reasonably well, but there's not many. So don't overestimate the expertise of the people you might be talking to in their market understanding. I think I've talked about the regulatory issues and knowing about what you're prepared to give up. And I think the key thing is that we want to see commercial management teams, and that's commercial management teams are the things that are in the most short supply. So I'm going to be in the lobby with the eSynergy team. So if anybody wants to come and have a chat with me or discuss their investment idea, then be very welcome and happy to talk to them. Okay.